Hello guys and welcome back. Hope you're good, doing well. So we're gonna look at the charts quickly, and then we're gonna watch for the setups. Okay, so I'm just gonna quickly go through so that you guys can get the idea that what we're gonna watch. All right, and what has happened over there and what to look for. Hopefully you can hear me. Yeah, so you can hear me. Yeah, just let me know that you can hear me. Sound is there. Yeah. Sound is there. Do you hear me? Just let me know, guys, that you can hear me. Sound is there. I can hear myself, so seems that yeah, sound is there. So hopefully, yeah. Okay, so let's move on quickly. We're gonna look at the charts first, and then we're gonna look at the setups. Okay, so usually what we do, hopefully sound is okay. So what we do usually, we look at the charts here. All right, so on this window. Okay, we look at this window for short-term opportunities, and this window, let me bring my pen. So this window is the window where we look at the setups, especially for short-term 3 minutes time frame. All right, so we are having Australian dollar, New Zealand dollar, pound dollar, and euro dollar. These four currencies are highly correlated with the commodities and equities. All right, so we usually pay attention, on these 8 charts. All right, and we get the lead, and then we trade on the laggers. So we are having US30, we are having NAS 100, we are having S&P 500, US 3000, and euro dollar, pound dollar, and New Zealand dollar, and US dollar, and Australian dollar. So this window is very, very important. All right, so this window is very, very important. So what's the important here? Okay, so if you are trading usually on these currencies, okay, so where we usually see the setups, we usually see the setup here on Australian dollar. Okay, most of the time you're going to see that the Australian dollar is a lagger. All right, and New Zealand dollar, these two charts are the most lagger charts we are having. So euro dollar usually leads us that where market going to go, and then pound dollar follows the euro dollar. Okay, whenever you see that the euro dollar is moving and pound dollar is not moving, just trade on this chart. All right, just trade on this chart and trade it into that direction where the euro dollar is going. So similarly, when these two charts are moving, euro dollar, pound dollar moving, all right, but Australian dollar is not moving, New Zealand dollar is not moving. All right, so you are paying attention on these two charts and looking to trade into that direction where these two charts are going, where the euro dollar is going and where the pound dollar is going. So trading into that direction. All right, and that's what we are doing. All right, so that's what we are doing. So on the other hand, all right, so on top of that, so equities tell us, all right, so equities tell us that where the lead and lag is appearing over there. So currencies are having more weight. All right, so currency tends to move faster and first. Equities move faster and first, all right, but currencies can lead us that where the the where the market gonna go, right? So let's say if US 30 moves first aggressively either direction, okay, so Australian dollar, US dollar also gonna go into that direction, and New Zealand dollar, these two charts go into that direction. So euro carry more weight, right? Euro carry more weights, and hence that euro leads us that the direction of the market, right? So this chart is important. Let's look at the other chart quickly. And the Euro Australian dollar chart, okay, so these are the basically leaders, all right? So these four charts are the leaders for the dollar move. They tells us that where dollar gonna go in coming days, all right? So we are into this move at the moment. We are into this move right now. A pound is falling against the dollar, pound is falling against the dollar, right? And euro is falling against the dollar as well. So we are into that move in the euro dollar and this move, and once we're gonna have floor on the euro dollar, okay, then euro gonna start rising. This move needs to appear over there in coming days to months on the euro dollar and pound dollar. This move tends to appear over there, okay? So we're gonna prepare for that move once we gonna have enough evidence over there on the euro dollar at that floor, and when euro gonna leads us, and then we're gonna start buying the pound and New Zealand dollar and Australian dollar. So we are way, and gold will also be a buy then. So we are not there right now. So that's the reason I watch this chart as well, okay? So this tells us that either dollar is set to fall or not. So dollar is about to form its floor. So maybe after the ECB read the scenes, we're gonna get the strength on the euro dollar gonna go back up, and then the others will follow that. So, and then this is the commodities. So same charts. All right, so same charts with the commodities, same four charts with the commodities: Australian dollar, New Zealand dollar, pound dollar, euro dollar. Okay, so these charts are also, commodities also leads us. So equities also, we also watch equities with these four charts, and we watch commodities with these four charts as well. So if you have attended the live streams in last couple of days, then I hope you get the idea that how commodities affect the currencies, all right? And we get the opportunities over there using the commodities. Okay, now we are having these four commodities here on this chart. So yesterday, if you remember that in the yesterday's stream, we were watching these four charts very closely, okay, and we were looking for a short-term buy opportunity on the gold, and we got a short-term buy opportunity on gold. Gold went up and then boom, cracked. So basically these charts are telling us that the euro dollar is testing the 10 or 9 September lows. Pound dollar is also heading to that. New Zealand dollar also broken that low. Australian dollar also broken that, heading towards that. But commodities were holding the high. Okay, that's the place where we were expecting silver to hold that top 32 and then start falling from there. So finally it held the 4-week highs and then started to fall from that top and heading towards that 10 September lows. So similarly, gold was a short-term buy over there for for short-term these areas yesterday there, and then finally we broke that low, even having that very uncertain time. So we are having a very uncertain time. Uncertain time means that the conflict is going on in the Middle East, but still gold is going down. Doesn't make sense. So that's why we were looking to buy for short term for upside on gold, in case if that spike up for upside and conflict gets worse, then we're gonna be in a buy side. So there is a, I don't think so that gold gonna go up to this lows 24.75. all right, and if even it is going to visit that low, still going to be a buy. So it may find floor somewhere there, or maybe somewhere within these areas. You never know where the floor going to be on gold for more upside. So that's the reason you have to pay attention every time in gold is forming new low within this uptrend. Then you're looking to hold it and looking to cash the floor and looking to buy it for upside, right? So we clearly can see that the other currencies are testing, the other assets and currencies, they're testing the September lows, and there is a risk for the gold to continue to keep falling towards that 9 September lows, which is somewhere 2500. So when you're buying gold, make sure you keep that thing in mind, that you are having strength on the dollar against the others, but dollar is still weak against the gold. Especially dollar has fallen, silver has fallen, all right, up to 50% tracement of this previous move. So we have seen there that the silver has fallen up to 50% tracement, but gold hasn't fallen up to 50%, still above that 50% tracement of this previous move. So palladium went below 50% up to 618, yeah, and copper is heading towards that. So there is a complete risk for these charts to continue to keep dragging lower all the way back to that low where the euro and New Zealand dollar are heading at the moment. Okay, so this risk, so we only going to attempt to look for buy for short term on gold when we're going to have some strength or deep correction on risk on assets. So for short term only, and if you're going to get the big next leg towards 2750, we're going to be lucky. All right, so that's the analysis on the commodity. So Bitcoin is also forming the similar formation. All these charts are also having the same 4R formation. Right, so let's go to the 4-hour time frame. So market is slow today. The reason that we have already seen that the big drops, okay, and now we are in a correction. Okay, so sideways correction is just happening over there on Australian dollar, New Zealand dollar, euro, all these charts, and come on, equities are doing exactly similar way the way silver has done at the top. So that thing you need to keep in your mind. All right, so where is the September lows on these charts? So we are here, okay, and this is the September lows, 2007 September lows, and there we are having highs. So we have already broke down from that top, and they are also heading towards that September low. So there is a complete risk for the total move to happen all the way towards that low on these two charts. All right, so we can continue. So we are now buying and just looking to get a lead on these two charts, that the other assets can also fall, like Nasdaq 100 index is highly correlated with the Bitcoin, that can continue to keep falling too. All right, so if BTC or Ethereum, they fall aggressively to this September low, okay, that means that the equities also can follow up. All right, so these are the 4 charts. Okay, we look at them. I look at them very often, okay, because I'm having total market cap and BTC. If BTC market cap is falling, all right, but if the total market cap is not falling, all right, means that these coins, BNB or XRP or Solana, they can continue to keep falling after the BTC market cap. So a kind of lead appears over there as well, so in the total market cap and BTC, and also these coins, BNB, XRP, Sol, they also lead us sometimes. If you follow them very closely, then you're going to get the lead to trade on the others. Mostly you trade on the BTC, all right, you trade similar way, you trade on BTC. This chart tells us that either the lead is appearing over there on or not. Okay, so you usually follow the Ethereum. All right, so Ethereum moves. Let's say if this breaks up aggressively, okay, that means either Ethereum gonna fall or BTC gonna jump. All right, if this chart breaks up aggressively higher and BTC doesn't move, it stay there, okay, but Ethereum falls aggressively back to that low, means that this is the trade. The trade is what happened. Okay, what I said, that is if you see that the Ethereum falls aggressively to the downside, okay, and this chart breaks up, all right, but BTC doesn't fall, so means that you catching the BTC, so something My pen is not working. I don't know why it's not working. Okay, so that's why watching BTC as well. All right, for getting a lead. I don't know why this is not working. Do you hear me? Hopefully sound is there and fine this time. That's why, guys, I was asking to you that if sound is there, because before that we had the sound but it wasn't clear, I guess. We'll check that later on. Okay, so hopefully it's fine. Yes, it's working now. Thanks for replying that you can hear me. Okay, so commodities still can continue to keep dragging lower all the way back to that low. So let's move on to the next one. All right, so BTC also can continue if BTC drop or either one drop first. All right, so how this works, all right, basically if we see that the Ethereum falls very aggressively and test that low, then there's going to be the opportunity to sell the BTC for the downside. All right, otherwise you sit and wait, you don't trade. This is a 4-hour time frame, so I'm talking about the lower time frame, 2-minute time frame chart as well. So yeah, these are the charts. Okay, what we look at these charts, what I look for at these charts. So these charts basically very important. Okay, no, they also tell us that where is the lead, okay, and which currency is strong. At the moment we can see that the Australian dollar is falling and then going up. Okay, so all charts are nicely following each other. Okay, no lag. The only chart which went up aggressively is the Australian dollar, New Zealand dollar. That chart went up and telling us that the Australian dollar is more strong than the New Zealand dollar. Okay, and means that this chart, the Australian dollar chart has to get down for the New Zealand dollar to go back up. So means that New Zealand dollar is somewhere close to bottom out over there. Okay, and Australian dollar is set to fall for downside. So this is a 3-minute time frame, by the way. So similarly, okay, so similarly on the euro dollar, but euro dollar is kind of sideways on this 4-hour time frame, as we are having a 1-hour time frame correction. So yesterday I posted this chart. Okay, there was what I was talking about. Okay, on this chart, the earlier I was on this chart, that chart I was talking about. Okay, the lead, what wave we're gonna have, what move we're gonna have on the dollar. So what dollar can do in coming days. Okay, the move is already appearing up here on this 4-hour time frame. This is a 4-hour time frame. This is the move we're gonna see in coming days. The move is already appeared over there. Okay, how the move is already appeared over there? I mean, what move gonna be over there on the dollar? It's this chart is telling us. All right, this chart and these two charts are telling us that. Let me click on this 4-hour time frame. There you're gonna see the next move on the dollar, what dollar is gonna do in coming days. Clearly we can see these two charts. Okay, if you understand these two charts, we know that what move is going to happen on the dollar. Okay, this chart, euro New Zealand dollar already went higher against the euro. You see, euro has already risen against the New Zealand dollar. We can see clearly over there. Euro is also rising against the Australian dollar. Okay, so somewhere here within this area, the white line, this white line is there. So that is also heading higher. So euro yen is also went higher, but euro yen is not a good lead. Okay, but euro yen rising, but it's not a good lead. So euro got stronger against the yen. But euro New Zealand dollar is a very good lead, which tells us that what move we're going to have on the dollar in coming days. And euro Oz. So all these charts are pushing higher, right? So we clearly can see this. All these charts, euro charts, are pushing higher, rising higher. And euro dollar is still sitting over there at that floor. We are still in the bearish trend and sitting at that floor. Why that is happening? Why euro is gaining against the other currencies, but euro is not gaining against the dollar? The answer of that is very much simple. New Zealand dollar or pound or chief or CAD or Australian dollar. You know, New Zealand dollar is a risk on currency, Australian dollar is a risk on currency, CAD risk on currency, pound risk on currency, all right? They are falling faster than the euro. That's what we are getting from this chart. This chart is telling us that they are, you know, the risk on currencies, all right? They are falling faster than the euro. Now, euro has already made that move against the dollar, but those currencies are falling now against the dollar and other currencies, which is pushing the euro higher against the risk on currencies. That's a leading move on dollar pairs. Now what's going to happen here? Euro has already gone higher against these currencies. That means at some point euro dollar also going to start rising towards the euro New Zealand dollar, towards the Australian dollar. All right, and once euro going to go back up, we'll go into that direction. What's going to happen then? We're going to see the pound also going to follow up. Okay, this is a very important stuff. So when euro going to start rising towards that move, okay, towards this move, we're going to see the pound also going to catch up. All right, so we're going to look for lead, and also we're going to look for buy if we're going to get a good move on the commodities. All right, we're going to get a lead. I mean, we'll see which one moves first. Either, you know, the yields moves first. Last time, if you remember that, dollar yen went higher, then yields, all right, 10-year yields, and then we start selling the dollar pairs, all right, then we start buying the dollars. So similarly, we'll see that which moves first now against the dollar pairs. Right now, dollar is very strong. So this chart is telling us that we may see again strength on the euro, or maybe yields can fall, or maybe dollar yen can. Most likely, we're going to see that the dollar yen going to fall faster, all right? Because this move, the move we are having on the euro and the pound, is telling us that at some point you're going to see that the commodities, the equity is going to fall down. When equity is going to fall down, automatically we're going to see strength on the yen. That's going to cause the strength on the yen. Dollar yen going to go down. Dollar yen and yields can be a lead. All right, that's how market moves. All right, we see strength on equities. All right, and when equities start quickly fall to the downside, we see strength on the bonds. All right, bonds goes higher, yields fall. All right, when bond goes higher, yields fall, we see strength on the yen. All right, dollar yen goes down. Dollar yen might be a lead, or maybe 10-year yields can be a lead, or 2-year yields can be a lead for us to start selling the dollar. We are not there yet, but this is the move we're gonna have next couple of maybe weeks, maybe 2-3 weeks. We'll see, maybe after the 18th of October, after the ECB rate the CN. All right, so similar move. Okay, you see that both charts are highly correlated. Pound and euro, we already got the move there. Same move happened here, same move happened here. So means that if you are selling the pound, you are selling the pound at the floor. Most of the move has happened already over there on the pound from that top, and we were expecting it to draw from that top. It has happened over there. Now if we are selling them, we are selling at the floor for short term only. Right, most likely you're gonna see a quick pop up over there on the pound, and pound gonna start rising back to that pound New Zealand dollar side. All right, this move is set to happen over there. So similarly on the euro dollar, so we need to see euro to spike up very aggressively for upside. Once that happens, we will start buying the pound. So we are way far away from that point. Okay, we will see clearly for that when that's going to happen. All right, so what's happening on the other, on top two currencies? They are falling. All right, if I'm gonna open the 4-hour time frame chart on that, they are falling. You can see there. All right, so they are falling in the 4-hour time frame. That's what I'm telling you. All right, that's what I'm trying to tell you, that we are still in a downtrend on the Australian dollar and New Zealand dollar. New Zealand dollar has moved a lot. So where is my pen has gone? My pen is just keep crashing. Okay, so there you go. Okay, so there we can see the New Zealand dollar is falling faster. I guess I need to open it again. Okay, so when you know that what move is going to happen next, you can risk anything. All right, you can increase the risk, you can decrease the risk, but the most important thing is that the probabilities, how high probability trade is. If the trade is high probabilities, you can adjust the risk. And if you know that if you're 100% sure that the market is going to move into that direction, the direction you're looking with either with 10 pip or 5 pip, you can risk any. You can even increase the risk with that for that 5 pip. All right, so risk is in your hand, but the most important thing is that the probability of the trade, how high probabilities are there for that trade, the trade you're looking. So you adjust risk accordingly rather than just blindly taking the risk. So what this is actually telling us, this is telling us that what are the probabilities of that trade, the trade we're going to take. All right, so this analysis is increase the probabilities of the trade we're going to start taking for upside once the dollar going to start falling. All right, so I'm waiting for my pen to start working, and then I'm going to draw. Then I'm going to talk about that war setup. Okay, so there we can see that the New Zealand dollar is falling faster than the Australian dollar. How do we know that the New Zealand dollar is falling faster than the Australian dollar? Okay, there is a chart, the red line. That red line is Australian dollar New Zealand dollar chart. This is telling us that the Australian dollar New Zealand dollar is going opposite, that is rising, while the other Australian dollar charts are falling. But the Australian dollar New Zealand dollar chart is rising, is telling us that the New Zealand dollar is more weaker. We even can see that on the euro New Zealand dollar, pound New Zealand dollar, New Zealand dollar is more weaker at the moment, because we got the rate cut last night and it went lower. But New Zealand dollar is telling us something here. Okay, New Zealand dollar is telling us that the Australian dollar still has to go more downside. Okay, the only currency which is left over there is the Australian dollar, which has to finish the move yet. All right, the New Zealand dollar almost done. All right, so euro has done. All right, the pound has done, but the Australian dollar is still, has to finish its move over there. It still has to break below that 9th of September low. So we still gonna keep looking for continuation trades on the Australian dollar on the pullbacks. All right, and on the other hand, we clearly can see that this place, all right, that the New Zealand dollar has fallen. Euro has aggressively gone higher, but the euro against the Australian dollar is still weaker. Means that the euro has to catch up the euro New Zealand dollar. All right, means that Australian dollar has to fall, and this move has to continue to keep falling all the way back to that previous low. So the opportunity is still over there on the euro Australian dollar US dollar. So we keep hitting on the head of the Australian dollar on the pullbacks for the downside. All right, that's how you look at these charts. All right, and this chart is basically tells us the this is simple, the dollar chart. All right, so I got a crash again on my pen. Okay, so this chart is telling us that this chart, this is commodities equities chart. All right, so this is inverted. Okay, maybe some of you guys don't understand that this chart. All right, the commodities usually goes up, and why I'm having the commodities inverted. Basically, I have inverted commodities very much similar like the dollar. All right, so to make it more easy to understand that both are going into one direction. All right, so both are going into one direction. If equities are falling, all right, so equities are falling means that on this chart, right, this is inverted. So if these lines are going down, means that equities are rising, and on top of that, this chart, dollar chart, means that the dollar is falling, the others are going up. So very simple. This is very simple and easy to understand. That this is the reason why I have inverted the commodities here. So if this goes down, like that, if this goes down, all right, that means if this goes down, means that the equities are rising. Okay, because this is inverted. All right, and that means the dollar has to fall. All right, this has to fall. So we can pick and choose the assets among them, either which is lagging. Like if the pound dollar is over there, the Australian dollar here, or euro sitting is over there, means that we need to sell the pound dollar for pound dollar to catch up the euro dollar. So we clearly can see that lag here. All right, within this chart, this chart tells us which currency is lagging while the other is moving. All right, I mean the dollar has to fall. All right, so dollar has to fall. If equities goes down here, means that the equities are rising, that means dollar has to fall here. Dollar has to fall. Or similarly, let's say if dollar moves very aggressively higher for upside on this chart, but equities are still struggling over there, okay, and suddenly one of them start picking up, that gonna be a lead for us that the others also gonna follow us. So we start buying the others, others which are lagging over there, and we're gonna get the lead from the leading one, and also gonna get the lead from the dollar. Yeah, so this is very good chart to look for that what is happening. If all these are moving neck on neck, like let's say this is moving very aggressively for the upside, and this is moving aggressively upside, all right, and both are neck on neck, there is no lag, that means we don't have any trade. All right, so we don't have any opportunity, so we have to wait for something to move first, and then we're going to start trading on the others. So very important chart. Okay, this is also important. All right, but I don't think so you guys gonna understand that, because most of the charts inverted on this area. This also tells us that right now we can see that the silver is over there. Okay, silver is rising, means that the others like New Zealand dollar, they can also follow up to that direction. So a kind of mixed chart. This is a kind of mixed chart, and this is gold and silver. easy to understand. Now let's hopefully you understand these windows. Okay, why I do watch these windows? I'm having these windows open on other screens as well, so I'm watching these windows over there all the time. So just for you to understand that how these windows can help us to understand that where is the opportunity is building over there. All right, so this window, okay, dollar is over there. This is dollar window. All right, this is dollar window. All right, it tells us that where is the which currency is lagging and which is right now. We can see that the copper is leading over there. Copper is strong against the dollar, and the weakest one is the dollar chief. Okay, we don't trade on the dollar chief based on this on 3-minute time frame, but in case just for your understanding, I'm telling you that the dollar chief is, or we can see there that silver is weaker. All right, silver is weaker against the dollar, and copper is stronger against the dollar. Means that there is a lag, and we may see some push up on the silver. Silver can also follow back to the copper, or other way around. All right, other way around, like silver is at the bottom and copper is at the top. All right, I mean switch. This is switching. All right, and switching means that if the silver keeps falling, all right, that means the copper is a trade to catch. Okay, so need to sell the copper from there, to copper to go down into that direction where the silver is going. So switching, so need to keep that switching also in mind, that we need to switch quickly. If you read it wrong, then you need to switch it really quickly to get it from the wrong one and get into the right trade. Okay, so yeah, okay, so this commodity chart, I'm telling you again, so most of the time what we see here on this commodity chart, that the US 30 moves very fast, aggressively. Okay, US 30 moves either direction, for upside or downside. So if US 30 moves very aggressively, means that the Nasdaq 100 index is a chart to catch for the trade. All right, US 30 is a lead most often when when market open. Right, when the market open. So this window, that window, this window, all right, and this window is commodities window. All right, and these currencies for scalping, these big currencies. Big currencies means, the major currencies. All right, so we trade on these currencies using the commodities and equities. So how we look for the opportunity. Okay, so I'm going to give you how trade appears, how you figure it out that the trade is ready to take. You don't look at the support and resistance. Okay, you don't simply look at the support and resistance. You just figure it out that where is the lead and where is the lag. That's what you do. Okay, so the easiest way. All right, so we clearly can see there. Okay, this is not a difficult stuff. We clearly can see that on US 30 moves started from here and went up to here. Okay, this is my low, this is my high. Okay, this is the move. We clearly can see that. Okay, what I need to do is just simply need to mark that. Just simply need to mark that. Okay, don't need to, I try to make it more simple so that you can repeat it every single day to catch the opportunities. Yeah, I tried my best to make it more simple so that you can anyone can repeat that same steps every single day to catch up the opportunities. Okay, we clearly can see there. Okay, move started from there to there. This is the every single day analysis. You don't need to do anything else except just looking at this same couple of steps, 1 or 2. These are 3 steps. Okay, what I did, I have found the lows and then highs and then drawn the fib lines. Okay, so I'm going to do that on this chart as well. So what is my low? I just need to figure it out, the date. All right, this is my time and date. All right, so this is high, time and date for the high. Okay, we clearly can see there the 9th of October 6:36 when it forms that low. Okay, when it forms that high, 9th of October 9:51. Okay, this is what I need to figure it out where is the lead and where is the lag. Okay, now we clearly can see there the Nasdaq 100 index is still back at that top, still holding the highs, while the Dow has fallen. Okay, this is lag. Okay, this is the lag on the Nasdaq 100 index. This is what you need to do, and this couple of steps going to tell you that where is the lead and where is the lag. Okay, there we can see that there is the lead. Okay, the Dow is falling, but the Nasdaq 100 index is now falling. So Nasdaq 100 index is supposed to be here at 38, where 38% retracement, where the Dow is. Dow is at the 38%. So means that this is my target. The first step, you figure it out that where is my target on the Nasdaq 100 index. Yeah, this is my target. 38% is my target. The max target is 38%. Okay, the maximum target. All right, first of all, I need to figure it out that where is the 1-to-1. Okay, my 1-to-1 target is supposed to be somewhere here within these areas. Okay, by taking trade from there and stop loss just behind, and my 1-to-2 target is supposed to be here. Okay, and in case if you see that this is not the this is the dollar CAD. All right, this is dollar. By the way, I was looking that as a US30, but this is dollar CAD. But the analysis is same. Okay, I was looking at the like US30, but this is not a US30. All right, this is dollar CAD and this is copper. But analysis is same. Okay, dollar CAD went lower, means that the copper also can fall down back to the downside. All right, so on all assets, so the analysis is same on all assets. Okay, so I'm gonna do that from here to here. Okay, we're gonna that high. So basically, the next high forms somewhere here. Okay, but I'm gonna use that high for that. Okay, we also have that lead over there on the silver, that the silver has gone up. Okay, this is also a lead that the silver has gone up. So similar way you need to do every single day and need to find you see that the silver has gone more down, means that the copper can fall. All right, and same on the gold. Copper can rise, not fall. Sorry, these charts are inverted. All right, these charts are inverted. So there we can see that gold is also almost, neck or neck. So the opportunity you look for all the way on these two charts, the silver and gold. Okay, the high probability opportunity appears over there. Then when silver moves first, then the gold, then you trade in the gold. So you buy gold. All right, when silver rises aggressively for upside, but gold doesn't, means that you're buying gold. Simply no if and that, this and that, and you're buying the gold. Okay, like this is, yeah, like that the gold can continue to keep pushing more higher. So slight lag over there, silver is leading and the lag on the gold. So that is your same. So this is what you need to do on all charts to figure it out that where is the high and lows. And soon market moves, you got the new high lows. Okay, then move on to the new high lows. Keep moving to the new high lows. When market forms new recent high lows after having the move, okay, you move into that chart quickly. So I'm gonna draw horizontal ray there and there, okay, and there. Okay, these are the high lows we can see over there. Even chart is showing the high lows, so we can see that. So euro is also falling. All right, pound is euro is rising. These are the inverted chart. All right, so euro is rising, pound is rising, but the New Zealand dollar chart is more weak. All right, and Australian dollar chart is more weak. Okay, they can also push up. So if euro keeps pushing higher, all right, and pounds keeps, if euro rise, all right, that means they're going to be a short-term buy on pound. Okay, but right now we are not looking for buy, as I said that. Okay, but this is the strategy. This is the technique we look for every single day, right? I mean, if euro breaks that, all right, pound breaks that, means that the New Zealand dollar has to break this low. this top, this high. Okay, this is high, the charts are inverted, and Australian dollar has to go into that direction. You clearly can see these lines even are telling you that which is lagging. Okay, this line is bigger, this line is bigger, and this line is smaller, means that they are already close to that previous high. All right, so this line is also smaller, so this line is telling you that they are lagging. These two charts are lagging behind these two charts. All right, so that's how we search the lead and lag every day. So this is what we need to do every single day. So high lows, find the high lows. Okay, so similarly there on the US30 is going higher, so move started from there. Okay, so what we need to do now is just to mark the high and lows, and then look for, this is low, this is high, this is low. All right, this is, yeah, so again, data analysis, check the same date and time. All right, high lows, so that you can figure it out, the high lows exact on the same place and same time, the one you are having on the others. All right, these are the highest lows, and again we need to check this 930. Okay, 930 on US Russell here. All right, and this is the highest. Now we can see there clearly that these charts are pushing higher, but these two currencies are not moving. All right, there we can see that. So again, same time, what is this time? Okay, this time and this time, and this is the, okay, this time on pound, and all right, so there you go. So we clearly can see that there is the high lows on all these four charts. Okay, so there we can see that these two charts are going opposite. Okay, if this goes opposite, we're not gonna pay attention on these charts. All right, if this chart goes higher, okay, this is more important chart for us. If this goes higher, we are not selling them. All right, we are not selling them. All right, so means that we are, if euro goes higher and this chart is lagging, we are buying. This is basically the sequence of the market. So we are looking at the sequence. This is a sequence. I have shown you that sequence over there already. Yeah, so if euro New Zealand dollar also went up, means that the euro has to go, euro dollar has to rise on that 4 hour time frame chart. Pound has to go up. So if these four charts start rising, Australian two charts, euro dollar and pound dollar, means that dollar has to fall. If dollar falls, then obviously dollar gonna fall against the New Zealand dollar, and the dollar gonna fall against the US dollar. So need to pay attention over there. That's the key chart. All right, these two the key chart. So these two charts are highly correlated. If euro moves, pound doesn't move, you catch up the pound. All right, but if pound moves but euro doesn't move, all right, you wait. If pound moves, all right, but euro doesn't move, you don't trade on the pound. All right, that means there is no sequential move. So sequential moves, why this sequence is there? Because of the risk on risk off. All right, so if risk on risk off move happens, so how risk on risk off move happens? So when risk off move is happening, means that the money is coming out from the equities and going into the safe havens. All right, then euro start playing as a safe haven, so euro has to rise faster than the pound. All right, so when euro rise faster than the pound, means that the pound also needs to follow the euro after later on. Okay, when euro play as a safe haven, means that euro has to rise against the pound as well. All right, when euro is playing as a safe haven because of the risk off event. All right, so when there is a risk off event, means when equities are falling, all right, then dollar has to go up, gold, yen has to go up, all right, and euro play as a safety than the other risk on currencies. So when euro plays as a safety than the other currencies, all right, so once things settle down, means that the pound also has to follow the euro. Okay, so I have shown you the last month charts on the euro, how we got the move, the lagging move on the pound when euro went aggressively higher but pound did not move, and we got a big move on the pound. So when we got a squeeze on the yen pairs, I mean the the carry trade unwinded over there on the carry trade unwinded on the yen pairs. Okay, now we can clearly see there the here is the trade. Okay, if New Zealand dollar moves down, breaks down, then okay, and these two charts doesn't move, okay, we still gonna have a trade over there. This is still a trade to catch. Okay, so this is still a trade to catch, and because your New Zealand dollar is falling faster than the Australian dollar, okay, means that Australian dollar has to catch up the New Zealand dollar on 4-hour time frame. Okay, that's why this is still a tradable for the downside. Okay, but we have to keep our risk low and target reasonable 1-to-1, because we don't have a big move left over the Australian dollar. We are selling them at the floor, so need to get out every time when target is reached. Okay, so these are the charts. So that's how you do it. You can rewatch this video, all right, to set up your charts for figuring it out, the trade setup. That's what I was doing yesterday when we were having a nice opportunity was forming over there on the pound. That's what I was doing yesterday. That's how you set up your charts for figuring it out. That we clearly can see on these 8 charts what's happening. All right, this is going up, broken the top. Okay, Dow hasn't broken the top. All right, this is going up, we clearly can see there going up, but these two going to the opposite direction. Okay, this simple thing is telling us that if we're gonna sell these two pairs, all right, then our target should be quick means we need to get in 1-to-1 target and bang, we cannot hold that trade for downside. We are going against the market, all right, we are going against the risk, against the risk on sentiment. What is this? The rise in the US30 is telling us the risk on sentiment is still there. People are buying the risk on assets. Okay, risk on asset shares are going up of these big names. Okay, and Australian dollar is a risk on currency. It's not a risk of currency, which goes to the opposite direction of the equities. All right. Okay, so that means if we're gonna take a trade over there, okay, and I'm gonna put stop loss over there, so the probabilities of that trade are less. Okay, are less probabilities that highly we're gonna get stopped out, because we are having a risk on move. The others are going higher, and if you're gonna look at there, it's just started to pop up. Okay, it's just started to pop up within, so they are pushing up, and they are pushing up, okay, and right after that, so that's how you look at it. If equities suddenly fall over there, and this chart doesn't do anything, obviously there is a trade. Okay, stop behind that entry. So there is no hard and fast rule that how you're gonna get in, where you're gonna get in. You just need to see a lead over there. If lead over there, wherever the price is, you just jump into the market, put your stop save you for losing more. Just put your stop over there, and as long as the lead is over there, trade is fine. Let that go for 1-to-1 first, and if move is aggressive, then extend your target from 1 to 2. All right, if further aggressive, 1 to 3, depending on the lead, how lead is doing. If lead is moving very, very fast, you can extend your targets. You can play with your target, can change your target. Okay, but this is what we can see over there clearly, that the Australian dollar is just stopped bouncing back, as we can see that the equities went higher. So this is the most important window, okay, which I watch all the time, this window. And there where we see the setup, there where we see the opportunities. Now let's get to the 1-by-1 chart. Okay, 1-by-1 chart, what has happened over there? If you do remember that since last 2 weeks, what we have seen over there. So first we need to look at the euro dollar chart, okay, because euro dollar chart was our lead. Okay, so same analysis. Okay, we don't need to put a lot of candles or a lot of lines over there on our chart. So I have tried to make it more simple for you, so that anyone can understand that what is what steps they need to take it to for a starting point. Okay, what we have done over there, if you do remember that in the previous month, all right, so September, we got a buy opportunity over there. Okay, if you do remember that, and we got a buy opportunity, then we got a continuation trade over there, then another continuation trade over there, all right, if you remember that, and then we got some targets over there at these areas. Okay, then some of you guys close your targets over there at this move. So we got a nice run over there on the euro, led by the dollar CAD. If you remember that, dollar CAD was running very fast for upside at that time, and euro was lagging. Okay, and then here we figured it out that the US 10-year yield was rising and dollar was rising against the yen, that the strength was coming on the dollar. Okay, and then you know the euro started to fall. Okay, euro started to fall, went lower very aggressively. So euro has simply broken below that, you know, September lows. All right, this is the key. So we started to fall again, same step, find the high lows, all right, what the high lows you are having. So this is my low. All right, so same date, I mean 9 September, 1 or 2 days, doesn't matter. All right, so 9 September lows, another. So 11 September here on the euro. Okay, top we found over there on the 30th September. All right, and then bang, we started to fall. So we almost retraced 100% of this move. Okay, we retraced. So these are the 3 steps which you need to do rightly every single time. All right, you don't need to do a lot of steps over there, just these 3 steps. My low is there. Okay, my fib lines are over there, my high is over there. All right, and we clearly can see that the move very aggressive, very sharp. Okay, and we've broken below that. All right, and we have a nice, you know, aggressive drop over there. And that's what we need to do on other charts. All right, the simple step. Okay, then we did that on the pound. All right, we found the high lows, and charts have been posted into the group. Okay, I have posted these charts already into the group when we were expecting them to fall from that top. So again, we found the 11th September lows. Okay, and the highest we found on the 30th September. We just figured it out, the third step. Okay, this is the third step. Now we can see that the price, where is the euro has broken below this. Okay, that means we still can see a small push to the downside. This one more leg is possible. So not 100%. all right, this is not 100% that we're gonna have that one more leg lower. 100% the move only gonna happen to the downside. Okay, this is not 100%. So as long as euro falls, so we are good to go for taking this chart to break down. Okay, remember last time when we were expecting the pound to break that low, it didn't. All right, euro broken out that low, this, all right, this low, but pound just moved away. Let me go to the euro dollar chart, because pound is strong, and the reason for pound to being strong is because that the rates are higher on the pound as with compared to the euro. Interest rate is higher. So if I'm gonna go back to this time, okay, at this area. So and we know that there were crises going back. No, sorry. So which chart? New Zealand dollar chart broke, I guess. I don't think so that the euro did not broke out when the crash happens. Let me check the New Zealand dollar. Euro did not broke that low. Okay, because some crises were going at that. I mean, and squeeze happened over there. All right, this low. This is this crash. Yeah, so squeeze happened over there. This move. So New Zealand dollar was more weaker at that time at this area than the so 16th of August, and pound went down after that, and then we got a move. So yeah, it's not 100%, 100% that we're gonna get the break below this time as well on the pound at the current price. Okay, but last time we were selling the pound from these areas, if you remember that, right? All these were sell opportunities. Okay, and then we got a spike on the euro because squeezed happened, and then we start looking for pound to go back up, and pound broke that top, and then we got a pullback, and then we were expecting a buy pound here. Okay, and then next move happened. So pound also nicely went lower, right? And there is no 100% confirmation that we're gonna have breakout of that previous low, so we don't need to stick to that imagination that the euro has done, and the pound is also going to break below that, and we're gonna have new low here on the pound. Okay, we're gonna do what we're gonna see simply, right? So you're gonna do what you're gonna see there. You can see there, yeah, the difference is just clearly appearing over there. Okay, so this we gotta break below that. Okay, so that means we can see one more leg lower here. This is possible but not 100%. All right, so we're not gonna stick to that 100% move can appear. So we are good to take these small trades over there. Okay, we are good to go for this move as long as we are having one more drop. All right, that's what we were doing yesterday, and that's no use supposed to do overnight. So we were expecting euro to drop. It dropped, tested that low. Short-term trades happened over there yesterday on that top of that risk-taking area. All right, and that move also has happened over there on the pound. So as long as we see that the euro is dragging lower, okay, we are good to go for this one more leg lower. And once we're gonna see that the euro start bouncing back up aggressively, okay, then the pound is done. Pound is not gonna rise aggressively right after the euro, because when euro gonna go higher, there's gonna be little lag for us to chase out on the pound for upside. And if pound goes up aggressively and euro stay low, okay, we will start selling the pound. I don't think so that gonna happen. All right, okay, because market has to go sequentially. It has euro has to go higher, and then you're gonna have the rise on the pound. So sequence has to play out first. So hopefully you understand that what has happened over there, the pound, and what can happen. Okay, so we have to be careful now when we are taking trades over there on the pound, because the most of the move has happened over there already from that top, and hopefully you have caught that. If not the whole move, some of them. Okay, before that we were expecting a trade over there, and then we got an NFP here trade, right, on lower time frame. Bang, this not NFP, yeah. So this move happened over there because of the Bank of England said that they're going to cut the rate aggressively, and then an NFP move happened here. So a good move happened over there on the pound. So similar move happened over there on the New Zealand dollar. We were expecting that to happen too on the other day. Yeah, there you can see that this has broken too. So broken the low, like we have seen the breakout of the previous low on the euro. Understand that? Okay, so prices are extremely highly correlated. They even visit the same dates and same times, so you just need to figure it out rightly. So okay, we broke the low, and pound hasn't done that yet. So Australian dollar is lagging, okay, and this is still lagging. So it's supposed to be where Australian dollar is supposed to be at this area at 127%. Okay, it's supposed to be here at this area, like others are there. Yeah, so it's supposed to be there. It's supposed to be there. So that's why we are still keen to look for continuation trade on here more as compared to the others. Okay, so it's supposed to be here. So lag is still there. The Australian dollar is still tradable. All right. So this is still tradable. So we're not going to target that much. All right, move. We're not going to target that much. So what we're going to target, simply one. All right. So I mean like this. So overnight there was a trade. I saw that when rate when the RBNZ, they cut the interest rate, I saw that trade, and this trade was happening overnight. Okay, so you're simply looking for 1-to-1 first. So on 3-minute time frame, we are trying to catch the top. Yeah, but generally on 1 hour time frame. Okay, 1 hour time frame obviously going to take time to hit that and carry risk. So better to track that trade with us on 3-minute time frame. That's the best. Once we see that the move is happening, we take that. Otherwise, taking now, putting trade over there, break or limit, that doesn't gonna work. All right, it can stop you out. But yes, this is what we're gonna target. All right, on a lower time frame, like 10 pip stop or 8 pip stop, like that on 3-minute time frame, and 1-to-1. This is the minimum we're gonna look for. Okay, minimum 1-to-1. 1-to-1 is, yeah, so it's a 4-hour time frame. It doesn't show well. So yeah, this is what we're gonna target, these ranges first. That's the point. Okay, these are the ranges to trade into, these ranges for the downside. And if you're gonna get a sharp breakdown, well, we are with the trend. Okay, the important thing is that you need to trade into that direction where the trend is. Okay, and the trend is to the downside. We still can have that for more downside, so we still got some potential over there. And bang on, this is also went up. All right, this is also went up, and it tested that low, the low which we were anticipating in the previous move. All right, we were expecting it to give us one more leg lower. That happened, and it tested that and reversed. So we were more focused on the others rather than on the dollar CAD. All right, but dollar CAD is still going, and very much similar like others. All right, it also broke. Okay, it also broke out the same place, the place which I have just shown you on the others. Okay, so date might be different because it was lagging. The stumble lows comes here, top there. Okay, we just broke out inverted chart. We broke that previous low and extended to the downside. See that, this low, that did low. So it can continue to keep rising, which gonna be a good sign for us to keep tagging on the Australian dollar for the downside. Okay, so gold is a slightly different. Okay, gold is slightly different. So gold's supposed to be, if I'm gonna pull out the New Zealand dollar chart on it, okay, New Zealand dollar chart or euro dollar, you see that the New Zealand dollar is suggesting us that the gold's supposed to extend up to this low. All right, extend up to this low. You see that? Let me make it more bigger. Make it thick, yeah, so that you can see. You see that New Zealand dollar is leading us. That gold has to go to 24.80 leading. So if I'm going to pull out the euro on top of that. All right, euro and gold highly correlated, and same step you see that euro is there, broken the low, the September lows, and okay, so there is the risk. That's the risk when we're gonna buy the gold. Okay, for upside. Okay, this is the lead. Euro dollar lead is telling us that gold can continue to keep correcting more. Why we are trying to buy the gold is that in case we are going against the trend which we are having right now in the markets. We have to be very, very good to catch the bottom over there on gold for upside. Very good. And if continue, you're staying in. If start falling, bang, you're out. So yesterday I have shared one of the trade with you over there. Yeah, when gold just bang up, went from within these areas. Okay, so somewhere there, and then I cut it. So because I knew that there is a lag and the gold is just a risk to hold it for more upside and can fall anytime. So again, the trade you are looking for is just a 1-to-1 here, the minimum target, and make sure you keep in your mind that we can break down and continue. So the good thing gonna be over there that the gold can find the floor at any time and can continue to keep rising like it did here in this area. Others were correcting deeply. Other currencies went lower. Okay, euro went lower, pound, all these went lower, but gold did not went lower that way. Gold just went into a sideways and then pop up. So similar behavior can happen over there. That's why you're trying to catch the flow based after watching the price action. Okay, the pure price action you need to look for. So silver is also going down. Silver was a chart which I shared earlier with you, that you're paying attention at that weekly top, and we may see the silver falling from there. Okay, if you remember that chart is there in the Slack. So we are going down simply. This is the chart. You can see that is catching now the other commodities currencies. Yeah, okay, and that's what we were expecting it to do first than the others, but now we can see that the silver is doing that right now. It's falling. Yesterday went lower aggressively, going after the New Zealand dollar, Australian dollar, or euro dollar. Means that it can continue. We are not having, trade, just simply take that out from your equation to trade on it. Okay, we are trading on the others, okay, after having a lead. But yes, this is can happen. What we're gonna do, all right? So where we are paying attention for the buy, where we are looking for buy, we're gonna look for the euro dollar. It's too early to start looking for buy, but that's where you are looking to buy. Or in case if a very strong signal appear over there on the dollar yen, then you are looking to sell the dollar yen. Dollar yen gonna go down then when equity is gonna fall. So for 3-minute time frame trading, you are following those charts which are over there on the other screen, yeah, rather than chasing these, right, and getting smoked and giving back whatever you have earned from there. So avoid doing that. We can see there the potential is there. Silver can fall, all right, and it's tradable, but we're gonna ignore it. All right, and same on the copper. Yeah, it's also started to fall to the downside. Yeah, so same analysis like I'm gonna ignore the dollar chief. Okay, so pound CAD is pushing up. Pound CAD is going against the pound dollar. Okay, means that this is also an indication. All right, the pound. So CAD and dollar, these two currencies are important to pay attention. All right, so if CAD is falling, means that the dollar is going higher. Okay, when CAD is falling, means that the pound is going higher. When CAD is falling, means that the euro is going higher against them. This is also a sign for risk of move, that the risk of move is setting up. Risk of move, euro is going against the New Zealand dollar or Australian dollar, or pound rising against the New Zealand dollar CAD, or dollar is rising against the CAD, means that the risk of investors are taking money away from the risk on assets, and they are building. They know something is going to happen. All right, they know something is going to happen within next 4 or 5 weeks or maybe a month, and that's why they are repositioning. They are taking their money away from the risk on assets and putting that money into the safe havens or safe currencies or safe assets. All right, they know that something is going to happen after 3 weeks or 4 weeks. That's why they are building their positions on the risk of assets. All right. So after 3-4 weeks, we're going to see the impact of that positions which they are building right now. After 3-4 weeks, when the risk on assets going to fall. So pound. Right, so pound USD. All right, so pound. Okay, there we can see that. Come on, there we can see that the little lag is appearing over there. You see that clearly? Okay, pound went up while the euro pound went up against the CAD. Means CAD is weaker. Okay, CAD is weaker. So CAD and dollar both are highly correlated currencies. When CAD goes down, CAD is sending a signal that the dollar is also set to fall. All right, both countries are next to each other, similarly like New Zealand dollar and Australian dollar does. All right, so weaker CAD is a signal that the dollar is also. This is a sequence. Okay, this is a market sequence. So when CAD goes down, is a sign that the dollar is also gonna fall once CAD gonna finish its move. all right, or New Zealand dollar gonna finish its move, or Australian dollar gonna finish its move. Yeah, so that's why we have to be slightly careful before selling the pound at that floor. Okay, because it can start rising back to the top and towards that place where the pound CAD has removed all those losses. Okay, these losses pound CAD has removed, and the pound went lower. All right, so you see that the only currency which is sitting over there at the floor is the pound against the dollar. Okay, the pound has already went up against the, let me go back to that chart, the chart which I have shown you earlier, this chart. Okay, there you see, there you can see. Okay, this is the pound CAD, pink pound CAD, and on top of that is a chief. Okay, and on top of that is a pound against the euro, then pound against the Australian dollar, pound against the yen, pound against the New Zealand dollar, all those gone. All right, and only the currency which is sitting over there is the pound against the dollar. Means that the dollar is set to fall, and this chart gonna spike and gonna go back up. All right, so this is a sign that these currencies these two currencies have done their move. Understand that? All right, so that's a pound CAD. Okay, so pound New Zealand dollar also going, so we're gonna look at these charts. All right, so we were expecting them to rise. We got a very nice move on them. Yeah, we were expecting. So we don't need to counter them. There is no sell opportunities. Don't start selling these charts right after getting, I told you that before that what we were expecting these charts to go down. Charts were there in the channel. Okay, we got that move. All right, so we got the Euro New Zealand, nice move happened over there on the Euro New Zealand dollar, this move. Okay, when we were expecting a sell opportunity over there from this area. Okay, nice leg lower happened over there. Euro also went lower against the pound. Okay, but we ignored these two. Okay, but we caught these two moves. All right, and similarly they haven't finished their moves yet. These charts, they haven't finished their moves. Okay, they haven't. How we know that these charts haven't finished their moves? Because we know that the euro has to rise against the dollar, pound has to rise against the dollar. They are sitting at the bottom. Pound and euro both have risen against the other currencies. The chart which we just seen over there on this chart, okay, this on the pound dollar window. All right, okay, the pound is sitting over there and these charts are rising. Euro is sitting over there and they are rising. Okay, means that once these currencies gonna pick up, we're gonna have slight strength over there for more upside. Okay, these charts still can push up. These two charts especially, all right, the euro and euro also can continue to keep pushing against but they have done. Okay, Euro New Zealand dollar done, pound New Zealand dollar, they've done the move. Okay, but these charts can slightly push up, and once we're gonna see that the New Zealand dollar and the Australian dollar, they're gonna start rising from the floor, then these charts gonna start falling. All right, then we need to see first a decent move over there on the New Zealand dollar and US dollar and Australian dollar, US dollar, before we start selling these charts. So they're gonna take a lot of time to sell. So they are in a trending move for upside. They can hold this low, these two charts. All right, this is still a buy opportunity over there, and this low, okay, for this move to happen. Okay, this previous low to hold, and this one more leg to continue like it has done here. Okay, this leg to appear over there, the leg which we saw last night over there. Okay, this leg to appear over there. All right, this leg has to appear over there. So these two charts still to continue. All right, so I don't need to look at these charts anymore. Okay, and this is also a sell opportunity, already shown that it has to go down further. All right, all the way to, again, same analysis. Where is my September lows? My September lows is there. All right, where's my high? All right, so high is there, October, and then it's going down. We still got a potential to look for them, and the next move you're looking entry somewhere there within these highs, okay, and target going to be that. This is a 4 hour time frame trade if you already caught that, all right, and you are still looking it to continue to keep dragging low, and pullback happens, just hold that high, the week high, hold that, give it slightly a reasonable room, stop loss, all right, and you're looking it to hold that high and these ranges to hold and continue to keep dragging low. We clearly can see that the Kiwi is set to tag that September lows, means that the Kiwi is leading us. The weakness is on the Australian dollar, and we still got a room left on the chief, all right, September and October, and it's heading towards that September lows, and it has to, and it can break that previous September low, so means that the Uzi chief is very well behind that, okay, so Uzi is still good to catch up. Okay, so same analysis here, broken down, easy 3 steps, high lows, fib lines, and we got the idea that which is lagging, which is leading. All right, so again, high lows and fib lines, and we know that which is lagging. All right, and Euro pound is also lagging, but I'm going to ignore that. Pound chief also going to be lagging. I'm going to ignore that. So for yen pairs, you're watching this. Once this chart fall, then you start trading on the yen pairs. If this pair doesn't fall, you're not trading on the yen pairs. All right, you're not trading, just waiting on the dollar yen, waiting on the others. Okay, once chief needs to lead, chief needs to go ahead. Once chief goes ahead, then you start selling the others. You start selling the yen or blah blah blah, whatever charts, you know, happens over there. Okay, so same moves on the equities. So Dow, okay, so same analysis like the BTC one. BTC is correcting. All right, so we can go after the, I mean, they can fall back to the September lows. All right, September low is there. Euro September low is there. So once we're gonna have drop on these equities. Okay, so Aussie also gonna continue to keep falling. Gonna go below. Yeah, franc is a bit weaker and heading towards that September low. Okay, this is September low and highs. So these charts are slightly ahead. So on the other equities, okay, so Nikkei index also can fall from there to and head towards that September lows. Okay, so US equities staying into that sideways, okay, but we are not trading on them till we get a good dip or good opportunity. Yeah, but it carry risk to fall towards the September lows. Okay, bang. All right, bang. So the carry risk. So we're not buying them. They are even pushing up, but we are careful for them as they can crash to the downside. Okay, so that's it. Enough. And yes, trading. Yeah, so we are still trading, and let's get back to these 3-minute charts and watch them and find the trade and find the opportunities over there. You see that we were just talking about on the gold, and gold was lagging the silver, and gold is just spike up over there, and there is the copper, which is just started to come down. We just spoke about that. All right, copper is lagging the silver, copper is lagging the I mean, basically the silver and gold are lagging the copper made its move, very aggressive move to the downside. So on this 3-minute time frame, it can visit that previous low. So yeah, that's basically this is what you are watching. All right, this is what you are watching, and if I see the setup, and then I will let you know. Okay, so I mean, we may not see most of the opportunities these days, guys, because we already have seen the waves. Market moved. We were expecting it to move, and it moved. Now we went into a correction, okay, and how this correction develops. So we are expecting this correction to do, by the way. All right, we are expecting this correction to finish and start going back up at some point. Okay, this move to happen. We are not buying that, and at the moment we're going to start buying once we see that yes, there is a confirmation. We are having lead. Then we will start buying that. All right. Then we will start buying for upside. Right now we are within this correction, okay, and let's see what that correction does and how it develops, and trading into that correction, okay, trading into that sideways market in this 3-minute time frame. So what you're watching for the next for the day is that the euro to fall, test that low, and pound is lagging, pound to continue and test that low. So this short-term trade. Okay, so we got a little lead over there on the New Zealand dollar, and Australian dollar is also doing that. Okay, so if this falls, test that low, this is the opportunity. Okay, this is the trade you're paying attention. This is the trade. Okay, it's gone. Okay, it's gone. How you are looking is just simply, I need to put some risk reward ratio so that you guys can get the idea. Okay, so as much high as possible to get in. If euro aggressively goes down to the lows, okay, then wherever the pound is, you're trying to get into the trade. Yeah, so I want to try to get into the trade as much high as possible. All right, but if I feel that I may miss the trade, okay, if I feel that I may miss the trade, yeah, and pound cannot pass that, all right, how I'm gonna feel that? If euro goes down aggressively, all right, if euro goes down aggressively and like this, let's say if euro aggressively goes down and tests that low, okay, then I have to get into the pound dollar sell wherever I'll see that it's visible. I mean, it's reasonable to get in. Okay, like this. Okay, this is if this happens. Okay, if this happens, then there is a trade set up on the pound. Okay, I'm waiting for the euro to lead me clearly to jump into the pound dollar trade. All right, if euro does not fall, go back up, there is no trade. I'm waiting for this to test the high, as much high as it can. All right, I'm not, yeah, there is a little move over there on the euro. Okay, if I'm gonna get into the trade right now, all right, this might be too early to get into the trade. Okay, and I can simply get stopped out on this chart. All right, yeah, this can happen, and I can simply pop, smoked on that trade, as I can see that the equities are still pushing up. So I need to see a clear drop over there, and then bang. If it doesn't test that, and the price is somewhere here, I'm gonna jump into the trade there. I don't need to wait for the price to test like this. Okay, then my trade gonna be like that. All right, slightly stop, little wider stop. Okay, and then one to one target first, and continue to keep dragging lower. This is just a scenario. Okay, this is not a trade setup at the moment. Scenario, possible scenario, how to look for. All right, so I need to see first euro to drag. Okay, and once euro drag, okay, and others, and the pound to go down. Right now we clearly can see there is no trade. Equities are pushing higher. Okay, and this might be just a small pullback on the euro and pound, and they can pop up the top and can go further higher. Okay, so let's just watch, and I'm watching too. Okay, enough for the commentary, and listen the songs. All right, and if you don't like to listen the songs, just mute.